Welcome back to my channel. I am RH Trader and have been trading for more than 5 years in the financial markets using ICT concepts. I teach a clear, simplified set of concepts that actually work in the markets. In this video, I will show you how I perform a complete, detailed top-down analysis to find high probability trades every week. We are going to be using the monthly bias, weekly profiles, and then the daily profiles. I will explain everything with clear steps using last week's price action on the Nasdaq. Do like and subscribe to the channel for more real trading content. Now, the first thing we want to notice is the key swing point that is formed in the monthly chart. This is called monthly bias. We study the art of these candles, the signatures that price has presented itself, and have a clear bias before moving on to the lower time frames. As you can see, the previous month there was a manipulation above this candle's high and closed below the opening price of that said candle. This will trigger an expansion in the following candle, which is this month. You can clearly see that this is a Judas swing since the opening of the year, and we expect lower prices to clear sell side liquidity pools. If we plot the premium and discount level of this dealing range, we can see that we are clearly in the premium of the range. Now let's drop down to the weekly chart. This is step 1. We need a clear understanding of the open, high, low, and close, and the arrays that are close to current price. After trading and learning for more than 5 years in the markets, I just use a simple fair value gap and previous highs and lows. At the beginning of the week, I expected a Judas swing higher into the fair value gap, and then probably a move lower if there was confirmation of the same. Note, this week before that is an inside week, and you need to understand a simple price action concept, that is, consolidation leads to expansion. Now let's drop down to the daily chart. This is step 2. Here we apply the weekly profiles to see which day of the week had a significant impact on price. We can use the economic calendar for this purpose. Monday tapped into the weekly volume imbalance. Tuesday took out Monday's high. Wednesday took out Tuesday's high and closed below into this bullish fair value gap. We are expecting this bullish fair value gap to not hold. Why is that? Because there is a clear sell side liquidity pool here and here. I use the daily time frame to find the liquidity pools for high probability drawn price. A simple trade on liquidity and return into a fair value gap is all I'm looking for. We have equal lows on this high time frame, and this will be my drawn price. After Wednesday closed into this bullish fair value gap, I'm expecting Thursday and Friday to move lower, targeting this sell side liquidity pool. We will be looking at these 2 days on the lower time frames. Let's drop down to the 1 hour time frame. This is step 3. As you can see, we have a new week opening gap here. We want to see this gap, or the weekly opening price can be used here as well, to be invalidated. As you can see, on Thursday, we have an hourly up close candle, which was invalidated by this specific candle right here. Then price returned into this order block and then eventually moved lower. You can use your change in state of delivery, an order block, or a fair value gap presented, which it did on Friday. And we'll get to that in the next slide. But what you need to note here is we have a clear market maker sell model. Dropping down to the 15-minute time frame for more details, we want to see the arrays which we are comfortable watching. If you find an order block on a higher time frame, you will find a fair value gap here. As you can see, we have a clear invalidation or a raid on liquidity formed on Thursday and on Friday as well. Here you can see we have a clear fair value gap on the 15-minute time frame, and the 1 hour fair value gap overlaps with the 15-minute fair value gap here. To catch this move, you can simply set a limit at the discount of the fair value gap and your stop above the invalidation, or you can wait for price to break lower, enter off this order block or this mitigation block as well. Ideally, this would be a trade with a fair value gap entry formed in the New York session. If you would like to see more of such detailed videos and simple explanations, subscribe and like this video below. Before I end this video, I would like to tell you about my paid community, which gives you more compiled details, personal access to me, and a private mentorship if you want to take this seriously. These were a few wins from the past week here. You can check out the link to my website in the description for more details. And I will see you in the next one.